Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it's been a very volatile week for the start of 2023, with the markets heading very aggressively to a bear or bull run in terms of which market you're trading. This all began after a volatile and high volume which lit up the financial market as New York trading on Friday has taken a wild ride as headlines now come and look towards the US job numbers as the US dollar, which measures the greenback strength against a basket of 6 major currencies, took a sharp downturn after cooling wages and moderation in the US jobs growth in December suggests that the US economy appears to be heading for a soft landing, not a recession. Global markets welcomed Friday's data, which showed the US economy added jobs in December, pushing the unemployment rate back to pre-pandemic lows of 3.5%. According to the Labour Department, the non-farm payrolls rose by 223,000 jobs in December, but the average wage only increased by 0.3, less than forecast of 0.4%. However, some signs still point to economic weakening after the Institute of Supply Management Services sector reported on Friday that the services purchasing managers index fell to 49.6 in December, down from 56.5 in November and marking the first time the index contracted since May 2020. So as I mentioned, the dollar index did take a sharp turn from 105.38 down to 103.59 and settled at 103.64. This saw the Australian dollar surge away from the support level seen at 66.60 and now looks back towards the top side of where the market's been challenging over the last few weeks, which is around the high 68. In light of the pattern, we do have an engulfing candle, so we do need to see further confirmation to support any upside moves. That is, if we see a break around 69.45, that will confirm a new bull leg for the Australian dollar and instead give us an objective around 71.5 cents. Failing to get that move above 69.45, the market might retreat this current rally as the top of the range, as we've seen previously, and eventually see a downturn. It's a little bit too early to call for a bull case, considering the technicals a little bit lackluster to support any stronger advance, but it all depends now on the outside range day. The euro also posted an outside range day, which waits confirmation, and that confirmation is roughly around 107.20. A clearance of there would give further indication that the dollar would drop back towards from the 103 down to 101 and therefore would see the euro rally on to a potential objective coming in around the 109 region. However, as I mentioned, like with the Australian dollar, we do need confirmation to support this current outside range day, and failing to get a break above 107.20, then we would see probably a pullback towards the region of around 105.35. The dollar yen took the rally on Friday to the highs of 134.5, but rejected, as you can see, and plummeted back towards 132, and now looks towards 131.45.55 as a potential target, with a key support level seen beneath at 130.5, as after challenging towards that end of December, rejected after posting the hammer. The market most probably will find demand because technically we're still holding up relatively well, so I'm not going to abandon the top side level around that 134.5 in case we do see another round of demand, as in case the dollar does rebound. Looking at sterling, a bullish outside range day now puts the focus back on the top side at around 121.60 to 122.25 for this week. A little bit of mixed indicators, but a strengthening MACD could support the case up to 121.60 to 122.25, with the broader call still seen at 124. Having rebounded in front of the level, somewhere around 1,820.30 area, gold surged on Friday and now looks towards the top side key point around 1,870 to 1,882. A good rebound off the midway point when we see the RSI here, So relatively, the bulls are still determined to take the market higher, and also with a positive MACD, and along with that, with the ADX also trending, should see scope up to the top side targets, maybe even beyond around 1,894. One step at a time. Let's see how the market takes the challenge to 70, and if we clear that, then 82 will be the top side target. A little bit of a mixed play when it comes to oil, but nevertheless, I feel the downside pressure is still there after the two heavy days, which posted around 10% of declines. The market has posted another rejection from that top side and still looks bearish towards this week of around $71.1030 as an objective, with the cap seen now around 76.2030. Well, that's a wrap for the morning. Thank you for joining me. Please look out for the intraday report and also the end of the day wrap.